Hey, Buffy the Rate Slayer here at SunWest Mortgage Company with your market insights brought to you by the Capital Markets Trading Desk. Every week, I break down what's happening in the economy, mortgage rates, and housing, breaking down the market so everyone can understand it. Whether you're buying a home, refinancing, investing, a homeowner, a realtor, or a mortgage professional, my goal is to help you understand what's driving the market, what it could mean for you, and how innovative technology like Angel AI is helping making the mortgage process smarter and more efficient. We've got inflation, housing, jobs, and Wall Street making big moves this week, so let's jump right into it. Markets. It was definitely a roller coaster week for the markets. Investors were balancing optimism around technology-driven growth with concerns over valuations, geopolitical risks, and inflation pressures. Rising uncertainty in the energy markets added another layer of caution, while higher bond yields put additional pressure on risk assets. But here's where things turned around. By the end of the week, technology stocks bounced back, investor confidence improved, and attention shifted back toward corporate earnings and the broader economic outlook. All right, here's your economic update. Let's just get into the numbers. So the U.S. trade deficit widened in May as imports increased across the board, while exports declined, pushing the gap to its highest level in more than a year. The deficit in goods and services trades expanded 42.2% from the previous month to $77.6 billion. Labor market news. All right, now let's talk about jobs. Even with the shortened week around the July 4th holiday, the labor market continued showing signs of resilience. Initial jobless claims fell by 2,000 to 215,000 for the week ending July 4th. Continuing claims rose by 8,000 to 1.814 million for the week ending June 27th. So what's the takeaway? Well, I'll tell you. Layoffs remain relatively limited, and overall, the labor market is continuing to hold up. Now, let's check in on housing, shall we? Yeah. So higher borrowing costs are still making things challenging. The MBA mortgage applications index fell 2.2% in the week ending July 3rd. Purchase applications declined 0.6%, while refinancing activity dropped 4.1%. Mortgage rates were basically flat, edging up just slightly to 6.58 from 6.57 the previous week. As for home sales, existing home sales fell 2.4% month over month in June to an annualized pace of 4.09 million units. That's another sign that affordability remains a challenge as elevated mortgage rates continue to weigh on buyer demand. Now, with all that said, let's wrap it up. So what's the bottom line? The economy continues to send mixed signals. Technology remains a bright spot. The labor market is holding up. Inflation and higher bond yields are still creating uncertainty. And the housing market continues to feel the impact of elevated borrowing costs. But looking ahead, all eyes will be on upcoming economic data, corporate earnings, and central bank policy signals to see where markets could head next. And well, that's a wrap on this week's Weekly Market Insights. If you found this video informative, hit that like button, follow for your weekly market insights, and share this with someone who wants to stay ahead of what's happening in housing, mortgage rates, and the economy. Until next week, stay informed, stay ahead of the market, and remember, nothing is beyond reach. Buffy, out.